All right, welcome to the Explainer. Today, we're going to decode the secret language of the market, candlestick patterns. You know, these little shapes, they tell a whole story. A story of wins, losses, and some pretty epic power struggles, all in just a single glance.
But here's the million-dollar question, isn't it? Can these simple little shapes actually predict where the market is headed? I mean, tons of traders swear by them, but let's dive into what the experts really have to say.
And this quote right here, this is the single most important rule we're going to talk about today. Look, this isn't about having some magic crystal ball to see the future. It's all about using these patterns to stack the probabilities in your favor.
So let's just jump right in and start by busting the biggest myth out there about candlestick patterns. Let's uncover their true purpose in a trader's toolbox. You know, the allure is super powerful, right? This idea that if you just memorize a few shapes, you'll unlock all the market's secrets. But come on, is it ever really that simple?
So here's the reality check, and this is crucial. Patterns do not work in isolation. They are not a reason to just jump into a trade all by themselves. Think of them more like a powerful confirmation, something that adds weight to a decision you were already thinking about making.
And check this out. This is where it gets really interesting. Our source material suggests that a good, well-placed pattern can actually boost your confidence in a trade from, say, an already solid 80% all the way up to over 95%. Now that is a pretty significant edge. Okay, so now let's get to the real heart of it. Because every single candlestick pattern is way more than just a shape on a screen. It's a visual story of a battle, a real tug of war between buyers and sellers. And to read that story, you've got to know the language. It all starts with two key parts. You've got the solid part, that's the body, which shows you the price range between where things opened and where they closed. And then you have those thin lines, the shadows or wicks, and they show you the absolute highest and lowest points the price hit. And this is where that story really comes alive. Take a hammer pattern. At first, it looks like the sellers are totally in control, pushing the price way down. But then, bam, the buyers storm back in and they drive that price all the way back up. That long lower shadow you see? That's basically the footprint of their victory.
Okay, so let's see how this constant battle between the bulls and the bears creates some of the most famous and recognizable patterns you're ever going to see on the charts.
Engulfing patterns are just, well, they're dramatic. They signal a massive shift in power. I mean, one candle's body completely swallows up the one before it. That shows a really decisive, sudden change in who's in control of the market.
Now these two are just perfect mirror images of each other. The hammer shows the buyers at the bottom of a trend basically shouting, "Nope, not going any lower." And the shooting star shows the sellers at the top of a trend screaming, "No way are we going any higher." Each one tells a story of rejection right at a potential turning point.
You know, some of these patterns, they unfold like a little short story. The morning star is a perfect example. It's got a clear three-act structure. First, the fall. Then, the pause. That little indecisive candle in the middle, that's called a doji. And finally, a powerful recovery, the dawn of a new trend.
Okay, so this is all great theory, but how do we actually use this knowledge in the real world without falling into that old prediction trap? Let's walk through a practical strategy.
And this right here, this is the absolute key. Context is everything. I mean it. A pattern that just pops up randomly in the middle of a chart, it's basically just noise. But a pattern that forms at a really significant location, like a support line you've been watching for days, now that is a powerful, powerful confirmation signal.
So picture this. The market's been dropping, it finally hits that major support level you had marked on your chart, and then boom, a perfect hammer pattern appears. See, the support level is your reason to think about trading, the hammer is your confirmation.
All right, let's bring it all home. Let's wrap this up with the single most important takeaway from this entire explainer. It's a simple shift in how you look at things that can make all the difference.
So please, whatever you do, don't just become a shape hunter, trying to memorize dozens of patterns. Try to understand what they actually represent. When you see a long wick, don't just see a line on a chart. See a failed attack by one side and a powerful victory by the other. That's where the real insight is.
And really, that's the question I want to leave you with. By shifting your focus away from prediction and towards interpretation, you can transform these candlestick patterns from just a simple tool into a profound way of understanding the market's story, minute by minute. So, what story are the charts telling you today?